Today is Tuesday evening, February 23rd, 2016, and in this video I'm going to talk about a few of the sentiment indicators that we use in our premium service. Now, starting out, this is a simple one that's provided by sentimenttrader.com. That's sentimenttrader.com with only one T on the end, and this data comes out weekly, and so this they call the optics or the optimism index. It used to be called public opinion, and so it shows you based on I know that they look at they combine data from the daily sentiment index and some of the other surveys, and that's how they come up with this indicator. But obviously when sentiment is more bullish, the market tends to peak, and when sentiment is really bearish, the market tends to bottom, and I should extremes. That's really what we're looking for. And so this is measured, I believe, on a scale from 0 to 100. And the one thing I want to point out in a lot of sentiment indicators is, and this is the same with technical oscillators, is note how the trend is different. The trend in the indicator is different during bull and bear periods. So you can see from 2001 to 2011 or 2012, the indicator spent most of its time in what you'd consider the overbought or bullish territory. Whereas over the last 4 years, you can see the indicator spent more time in bearish territory. And that makes sense because in a bull market with a strong trend, sentiment is going to be bullish most of the time. The indicators are going to be on the high side consistently. And conversely, when you're in a bear market, it's the opposite. You can see that the optimism index over the last 4 years, it's spent most of its time between 20 and 55%. Whereas if you're I'm just eyeballing it, but if you look at from 2001 to 2011, I mean, that spent most of its time from about 40% to 80% or 85%. So that's something to keep in mind. And this is another indicator that we use. We keep track of the put call data for GLD, for gold, and also in silver SLV we track. And when the put call ratio is rising or it's high, that means there's pessimism in the market. And we smooth this data with a 20-day moving average, and that is shown at the bottom of the chart in blue. And so we put lines where the gold market, the price of gold I should say, bottomed, and you can see those are peaks in the put call ratio. Now, it's interesting to note we could be transitioning back into a bull market, and so this data could change, and we don't really know where the peaks are going to be as far as the 20-day moving average. I mean, right now it's very low at 0.38, and the 4 peaks that we've shown in the chart for the data, those have come around 0.95 or as high as 1.2. So we'll just have to see. I mean, not every piece of data is always going to give you a perfect buy or sell conclusion for the market. That's why you have to look at the technicals, and you have to look at various sentiment indicators to really get a feel for where the risk reward is, and what the probability is in the short, medium term, etc. Now, this is probably the sentiment indicator that most look at. This is the commitment of traders report for gold, obviously, and as you know, if you've watched our videos, we measure it as a percentage of open interest. So we just take the non-commercial net position, we divide that by open interest, and here's the data in this. I mean, we have it going back to the mid 80s, but in this chart it goes to 1990, and so currently it's at 31%. And so when the position is higher, that means that there's more speculators long the gold market. And if the data is negative, which we haven't seen since late 2001, that means that the speculators are actually net short the market. And again, we haven't seen that since 2001, although at the recent low, the net spec position, I believe, was very close to zero. I think it was 0.4% or 0.3%, something like that. So basically, the speculators were almost neutral, or essentially neutral at that point. But a couple things I want to point out here. First of all, the speculators, they're really the traders and the gamblers in the market. They're not the commercials, and the commercials are the users, producers, and consumers of the commodity. And the speculators, they tend to be trend followers. So when gold or any other market goes up, they get bullish as it goes up. When it goes down, they get bearish. And that's partly why, in terms of just all sentiment indicators, you see different ranges in bull and bear markets. We talked about this before. But as far as this data, you can see recently that during the bull period, it spent most of its time from about 20% to 50 to 60% on the high side. And in the recent bear market, it spent most of its time from about 5% to 40%. And the other point I want to make, which is very important, and focus on the three arrows that I'm showing and also where we are right now. And that's how it's interesting, because when you transition from a bull to a bear market, sentiment can get really extreme and it can stay that way. So in other words, if you go back and you look at the stock market in 2002 and 2009, there was a very strong recovery after those major lows, and sentiment indicators got very bullish right away, and then it stayed that way for a while, and there never really was a big pullback or a big correction. So that's something that can happen when you shift from a bear to a bull. Is sentiment will get, after the market moves and has a big rebound, sentiment will get really bullish, and then it'll just stay there, and the market won't have some huge pullback. And you can see the same thing when you transition from a bull to a bear. I mean, we've seen it in the stock market. Obviously, it's rebounding, but I mean, sentiment. A lot of the perma bulls, they're constantly pointing out sentiment. Look how bearish everything is. But when the market trend changes, sentiment adjusts, and to go from a bull to a bear, to use that example, look at this data in 2012 and how the net position peaked when gold peaked around 1800. The net position went from 55% or so, and it just kept going down. I mean, I went down below 20%, and then it went to 4 or 5% before gold had that bottom in 2013, and then the trend was still down after that point. So the sentiment is really secondary to the trend in the market, but still, it's very, very important. And to get back to the three arrows, you can see, look in 2001. I mean, the net spec position went from minus 40% to 50% very quickly, and it went from it was in 2005, early 2005, it was below 20%, and then it shot up to 50%, and it even stayed pretty high at the end of 2005, and gold had a fantastic early 2006, and then it did have a long consolidation. But the same thing happened after the low in late 2008. The net speculative position bottomed in the low 20s, and it shot up above 50% right away. And so now we're looking at the position, 4 weeks ago or a month ago, whenever it was, it essentially has gone from 0 to 31%. And yeah, I mean, that's a big move. And gold, it's possible that it corrects, but if gold is really transitioning into a bull market, I mean, this reading could shoot up and get to 50%, 55% before gold consolidates or has a correction for several months. I mean, the 31% where we are right now, that's not even higher than the peaks that we've seen during the bear market of the last couple years. But if you're comparing where we are right now to where we were in the last bull cycle, I mean, 20 to 60% was the range most of the time, and now we're at 31%. So that just shows you how to look at sentiment. It's very tricky, It's secondary to the market trend, but and when the market is changing that trend, sentiment can look like it's getting extreme, but if the trend has changed, you need to adjust parameters. And so if we're back in a bull market for gold, then we would expect the net COT position, it's probably going to spend most of its time around 50 to 60% when it's rising and trending well, and then when gold has a correction, it could spend its time around 20%. So just keep that in mind. I hope that wasn't too confusing, and these are just some of the things that we follow in our premium service, and these are, as I said, these are just a few of the indicators. There's other sentiment indicators that we look at, but thanks everyone for watching, and we'll have another video for you along these lines in the next week or two.